Hello and welcome to another episode of Earth911's Sustainability in Your Ear. I'm Mitch Ratcliffe, and we are back to continue our conversation, our ongoing conversation about ESG investing. That's environmental, social, and governance investing. You know, we've been talking regularly for the past few months with Newday Impact CEO Doug Heske about how to use our investment portfolios to achieve environmental improvements. And two recent reports spurred my curiosity about how Doug recommends people get started doing ESG investing. First, there's a Yale program on climate change communication survey that found that 60% of Americans are, quote, alarmed, unquote, about the climate crisis. And being alarmed with nothing to do is not a good situation for anybody. So now is the time to provide these alarmed people with some ways to act. The second item of news was that 2021 was the biggest ESG investing year in history by more than twice the previous level. $120 billion flowed into the green economy last year, according to Bloomberg. But those investors are still concerned about greenwashing, and they're not confident that they can always choose companies making real environmental progress. So it's a great time to talk with Doug about how to pick an investment goal and think about the mix of stocks, ETFs, that's exchange-traded funds, green bonds, and other bonds, including the geographic mix and other assets you may want to consider when building a sustainable development portfolio. And I suggest as we're talking that you visit Newday's Sustainable Development Equity page. In fact, we'll stop, pause the podcast and take a moment to go to newdayimpact.com. That's all one word, newdayimpact.com/sustainable-development-equity. And open it up, and as we talk, you're going to see information there about the United Nations Sustainable Development Goals. They're also often referred to as the SDGs. And those topics map to the investment considerations that all of us should be thinking about as we go about creating an ESG portfolio. Welcome to the show, Doug. It's good to have you back. How are you today?
I am doing well, Mitch. It's great to be back.
Well, listen, this is a big topic, and I know we've been talking about aspects of it for a while now, but can you tell us about the United Nations SDGs and how Newday uses them to ground your investment decisions?
Absolutely. So first of all, a bit of framing around the SDGs. The goals formed by the United Nations are a collection of 17 interlinked global goals designed to be the blueprint to achieve a more sustainable future. Mm-hmm. But not all the goals are created equal, at least in our minds. So what does that mean? First of all, it should be no surprise to any of our listeners that the state of our environment and ecosystems today are in peril due primarily to humanity's impact on the world. The Earth has entered this new geological epoch characterized by the significance of changes to the Earth's biosystems like global warming and resource depletion. So the math of the planet is quite simple. As the population grows from 7 billion to 9 billion people, we are using the equivalent of 1.5 times our planet's worth of resources each year to produce the goods and services that today's lifestyles demand. So this obviously is placing huge strains on our planet. So in addition to the United Nations Sustainable Development Goals framework to guide our investment and impact work, we are also focused on 9 planetary boundaries, which are focused on what I would define as environmental boundaries. Mm-hmm. These are boundaries that were set by the Stockholm Resilience Center that define the limits for a safe operating space for humanity. So we have used the SDGs and the 9 planetary boundaries to help us focus on a core set of impact initiatives and portfolios focused on things like climate action, ocean health, clean water, wildlife conservation, animal welfare, and some other things. Things like biosphere integrity, chemical pollution, climate change, ocean acidification, freshwater consumption. All of those things are really, really important things to consider as we are in this really challenging time and placing strain on the planet. So the problem is that if we can't keep these things in check, we've created a whole different set of stresses and circumstances for so many of the other goals. And our planet Earth eventually becomes uninhabitable.
Well, and we reach Earth Overshoot Day, which is the day we exceed the natural capacity of the planet to absorb the mess we make, as well as to provide the food and resources we need. Earlier every year. the first time we did this was in 1970. This year, this past year, 2021, it was in late July. So we are, as you said, using almost 1.5 times as much stuff that the Earth makes or can take back on an annual basis. So as I'm thinking about my investments, should I be trying to tick all the boxes you just mentioned, or is it better to pick a focus and concentrate on it, such as trying to reduce ocean acidification?
Yeah, I think that's a really good question. So relative to the 17 UN SDGs, as we had talked about just a moment ago, there are some of the SDGs should be a primary focus for us right now. And so certainly topping the list of those priorities is climate change, or goal number 13. As unless we get net greenhouse gas emissions down to net neutral, the effects on our world will be catastrophic. So clean water and sanitation, goal number 6 is another one. 884 million people today don't have access to clean water. Another goal, number 7, affordable and clean energy, is also critically important. We have to stop fossil fuels from entering our atmosphere. Fossil fuels are responsible for 74% of greenhouse gas emissions today. And then 2 others that I would focus on: life below water, which is number 14. Our oceans serve as a critical carbon sink and also a ventilator for the rest of the planet. Yep. And then something associated with what all of our listeners can do, tied to responsible consumption, or goal number 12. So this ties back into ag and food production. 15% of our greenhouse gas emissions today come from livestock production. So human beings, citizens, can have a massive impact by just changes in their behavior in their daily lives.
Well, and that's the important point, is that we can make small changes in how we spend and consume in order to send messages back into the economy to change the way that we produce and use stuff. But we can also invest to change the future so that those companies or new competitors can enter the market and do a better job, eliminating the carbon footprint, for instance, of our energy production. But here's a question that you always will hear somewhere in this conversation, and that is, do I have to accept lower returns if I invest in ESG? And my take on that is, if I do get a slightly lower return, that the deficit is actually going into something I care about, so I'm okay with it. But is it true that we're going to have to make less with our portfolios if we invest in ESG?
Quite to the contrary. ESG investing should no longer be viewed as concessionary. And to state it very matter-of-factly, that argument is over. In fact, 86% of the studies that have been completed since 2010 have evidence of positive, or at least a neutral, correlation between positive ESG behavior and performance. According to Morningstar, socially responsible investment equities generated average annual returns of 11.19% versus 10.55% for non-SRI actively managed funds for the 5-year period ended in 16. And those performance characteristics have only gotten better from here. And this would all make sense, right? So we as portfolio managers are in the business of identifying great businesses. So what do great businesses do? They generate an extraordinary amount of wealth for their stakeholders and shareholders. They are businesses that leave a lasting imprint on the world and on their communities. And they're creating what we identify as contingent assets that are not typically reflected in financial metrics. So if you can identify those intrinsic characteristics as a part of what these companies are doing, you can capture alpha associated with that.
Well, and that's an important point, that a portfolio approach to this is going to get a better result than picking one stock and putting everything in on it, as I was asking about before. But that requires management and attention. It also requires access to information. And you and I have talked many times about transparency. What kinds of information are you looking for from a company before you will even consider them as an ESG investment?
So we approach this problem a little bit differently, in that we want to ensure that across all of our investment portfolios, they are broadly meeting the test of both ESG and impact. And those are two really, really different things. They can be the same thing, but most organizations are not wedding the two of those. So ESG is a framework for making good investment decisions associated with environmental, social, and governance characteristics within an organization. Impact investing is so much more intentional than that, in really determining how is your capital going to be dedicated in a way that results in a very specific impact. So we are using an ESG framework across the portfolios to identify what is a universe of companies that broadly meet the test for ESG. And when I say broadly meet the test, I mean that we don't want a company that is in our climate action portfolio to be failing, as an example, on work associated with diversity, equity, and inclusion, or water resources and things like that. We then thereafter are applying what is a bottoms-up, qualitatively driven, fundamental process associated with securities identification and the timing of placing a particular company in the portfolio given economic environment and market circumstances and things like that.
So on the page that we were talking about before, your sustainable development page, you talk about the idea of exclusionary screening, which is essentially you set a baseline. If a company doesn't do well enough across these key factors, it doesn't make the cut. And then once it makes the cut, you're starting to select out of those that pass muster, the ones that are going to perform the best. So, and this is a little bit of a restatement of something I asked before. Is it better to look at a more diversified compromise investment portfolio where you've got the average up across all the things that you're looking at, or to focus in on one or two of the SDG criterias and then use that to determine which stocks, funds, or bonds to consider?
I think that you can achieve, I think that you can accomplish both. So exclusionary screening is just one tool that investors can use to make an impact. And it's a really important tool. So as an example, we weed out through our negative screening process, anything that's a part of the Carbon Underground 200. We also look at arms manufacturers, polluters like some chemical and ag companies. But an even more important part of ESG and impact is about positive inclusion. What organizations are taking very deliberate and verifiable steps to improve their ESG practices? The other piece that's critical associated with this work is that that you're not passively investing in a portfolio of companies that are doing good work, but shareholders should be using their voices today to engage with an organization, to improve their behavior. They should be getting involved in these issues personally, so that as an extension of using capital as a tool for change, they're doing a lot of personal and professional work behind that from an advocacy perspective. So many of our portfolios are broadly diversified. In fact, I should say all of our portfolios are broadly diversified across sectors to control risk. Most of them carry what's identified as a beta ranking of 1. Which is essentially a ranking identified as a reference point to risk in the marketplace. And so that ends up becoming critically important. So somebody with a more limited amount of capital should feel comfortable in investing in one portfolio, as an example, tied to climate action, or more broadly, an entire set of portfolios if they're looking for broader impact associated with the thematic issues that we work on.
So another theme on the page is the notion of a pure play ESG stock or bond. Can you just demystify that term for our listeners?
Yeah, absolutely. So pure play organizations are ones that I would characterize as direct impact. So they are organizations that are doing work that is directly tied to the ESG impact theme. So that would be an organization like in our ocean health portfolio, Tetra Tech, which is specifically working on ocean health issues. An indirect company would be a technology organization like a Hewlett Packard or a Dell Computer, which have developed supply chains that are totally focused on recycled, reusable ocean plastics.
Yep.
And we give consideration to both of those in every one of our portfolios. We do aim that at least 65% of the portfolio holdings in each portfolio are pure play organizations directly tied to the impact theme.
So you list 5 pure play stocks on the page that we're talking about, and we've talked about a couple of them before: Waters Corporation and Tractor Supply Company. So, Waters is a water treatment and technology company. Tractor Supply Company is a large retail chain, multiple retail chains that sell farm and pet supplies. Why are those two, to just remind folks, companies that you consider really good progressive investments?
This is a really fun subject to be talking about because, oftentimes you'll see a particular portfolio, or a particular constituent in a portfolio and say, well, what does that have to do with ocean health, or what does that have to do with wildlife conservation and animal welfare? So specifically about Waters Corp, they are a very different water company in that they are actually a diagnostics and research company delivering specialty measurement solutions using ultra-high performance liquid chromatography. So what does that have to do with water? Wastewater reuse is an essential component of the global water supply. Water has to be clean and safe to use. Industrial growth, ag processes, municipal waste are all posing a major threat to the environment and to human health today. And so having an organization like Waters Corp in the portfolio makes a lot of sense because of the work that they're doing around the water issue in general and the measurement of that water, especially for human consumption purposes.
So let's talk about the other 3 companies you've got listed here. There's Agilent, which is an IT company and technology company. They've made very extensive ESG commitments. Why do they stand out?
It's been interesting. I mean, Agilent, typically tops the list of most sustainable companies. In fact, 2021 marked their 3rd year in a row that they ranked in Barron's most sustainable companies, in the top 3 of Barron's most sustainable companies. So they have been now committed for more than 20 years to reduce energy, waste, water, and CO2 emissions. And, this is an organization that is taking additional steps, like a lot of other organizations, to reduce their greenhouse gas emissions and making commitments to do so by a specified date. So, they are an innovator across their business. They certainly are building a reputation as an innovator in sustainability as well. And we are very, very excited about their prospects, particularly on the sustainability side. They have this really powerful mission to advance the quality of life. And so sustainability is a really, really important part for Agilent meeting that mission.
And how do they perform generally over the course of the 10 years that they've been dedicated to this, or 20 years?
Yeah, Agilent has performed extraordinarily well. We view it as a core holding going forward in several of our portfolios, and we believe that they're going to continue to be an outperformer and a leader in the sustainability field.
Now, the next one is O'Reilly Automotive, which I think a lot of people would be surprised by because, of course, they're deeply enmeshed in the fossil fuel economy. But they've made very extensive environmental commitments and progress, as well as focusing on their participation in communities to bring people into a representative company. Tell us about them.
Yeah, so I'm so glad, Mitch, that you asked about O'Reilly, because like a lot of people, when they hear O'Reilly Auto Parts, they're like, okay, what does that have to do with sustainability, right?
Yeah.
But this is a great example of how any organization can make really, really meaningful steps of being a positive community citizen associated with sustainability. So this is core to their mission. And, they live this sort of green mission across the organization in everything that they're doing, through recycling programs, through having opportunities for individuals and organizations to drop off recycled oils and things like that. All of their distribution centers are green distribution centers associated with the LED lighting, water consumption, a whole number of things like that. So I can go on and on associated with the work that they're doing. I mean, even with reference to their delivery fleet of vehicles, which are electric vehicles and all. So they are, particularly in this industrial space, really an incredible leader associated with sustainability.
That's fascinating, the idea that the automotive companies could be part of the leadership in this next economy. Also reinforces the idea that we can have a modern economy rather than have to go back somehow in order to reduce our footprint. So the last one I wanted to ask you about is Target, which has the Target Forward program, very ambitious sustainability strategy. They're also looking at reducing waste in their supply chain. Tell us about them and how have they done over the last 10 years?
Target has done extraordinarily well from a financial performance perspective, and they've been, a big beneficiary, of course, what's happened with the nesting of America, right? Given COVID-19, one of the things that we are particularly proud of regarding the work that Target has done is really around their diversity initiatives, and they have been an incredible leader in building what is a more diverse workforce across America. 50% of their people today are persons of color, and more than half, 58%, are women. Nearly 42% of Target's leadership team, as an example, is comprised of women. So they're an important holding for us, especially on our diversity, equity, inclusion portfolio. But that's not all that they do. I mean, associated with sustainability, they have a major role to play associated with climate change. So, they're taking a deep look at their supply chain partners, industry partners, and other stakeholders to really but continue to reinforce the importance of going to a zero carbon economy. So, the other piece is that they have been associated with pollutants and whatnot. Target became the first retailer to introduce a chemical strategy that introduces or addresses their entire value chain, operations, and every product that they sell. So again, for a major retailer, this is the kind of depth of work that they're doing to really drive sustainability. Even on the water side, in 2018, they announced a major freshwater stewardship program with goals that build on their existing water management aspirations. So setting up frameworks so that all of their facilities are more conscious users of water resources. Of course, another big area associated with any major retailer would be plastics. And this is directly tied into the Healthy Oceans Initiative that we embrace, that they are looking for better solutions associated with the production of plastics and how those plastics get reused in the supply chain associated with consumer purchases and things like that too. And like a lot of these organizations developing or doing really, really admirable work on delivering what are sustainable products and also supporting sustainable operations across their footprint, across the entire organization.
It's interesting because we talk about the future, but what you're talking about and describing now is a vision of the future that you can touch today. Granted, we're not there yet, but companies like Target and O'Reilly, Agilent, Waters, and many others that we've talked about on the show before are examples of companies making the right steps. So those alarmed people I mentioned in the introduction, 60% of Americans are really alarmed about the fact that the climate crisis is here and real. No surprise, but they just figured this out. What should they be doing and how should they be thinking about an investment mix of their own, and particularly with regard to whatever age they may be?
Yeah, I think some of that depends on the time horizon, but if you have a long-term view, investing in equities is your best bet, but don't invest all at once. In a more normal interest rate environment, a combination of both stocks and bonds would make sense. And there are opportunities in every sector of the market. in every asset class. So as an example, one of the portfolios that we run is a sustainable muni exchange traded fund that trades under the symbol SMI, that gives consideration to those communities around the United States that are subject to more extreme risk associated with climate change. So as an example, you think about the state of Florida, and most of Florida, from a municipal perspective, has been screened out of the portfolio with the exception of Gainesville because, over the course of the next 30 years, they're subject to extreme risk tied to sea level rise.
Yeah,
right?
Gainesville's the highest point almost the highest point in Florida.
That's exactly it. So, from our perspective, citizens and institutions should be developing what is this big tent view of the world. And unfortunately, even today, the US is somewhat of a laggard relative to other parts of the world like Europe, which are so far ahead of us regarding ESG and impact and integration of ESG into their portfolios. So the US will get there. We've made extraordinary progress over the course of the last couple of years, and it's one of the reasons that we're seeing the explosion of assets in the space right now. But there is an opportunity for everyone to participate in this space. There's some really interesting work that should be considered given rising interest rates right now on the fixed income side that directs in a very secure way capital back into the communities, local communities that are supporting women entrepreneurs, minority entrepreneurs, right down to the neighborhood level. So, this is a field that continues to advance. And with the data set, as we expect to get stronger and stronger over the next couple of years, there will be new products and services and opportunities for people to take advantage of.
Now, you mentioned Europe, but I wanted to ask you more generally about overseas investment. And the reason why is that there is not always good reporting. There is in Europe,
Right.
There is in the United States. But for instance, China is on the spear point of the future of the global economy. Can we trust the data we get from a Chinese company in order to make an ESG investment?
No, unfortunately, not always. And China, as an investment opportunity, should be approached with skepticism. We do have some exposure to Chinese companies in the EV sector, but you've got to pay very close attention to the data there. And we have a problem with greenwashing, not just here in the US, but all over the world.
Yeah.
The challenge in China is that, there's not the same level of regulation or transparency associated with data. So sometimes it's hard to know what's really going on behind the scenes. So there have been circumstances tied to, as an example, two of our climate portfolios where we've looked at the superficial data associated with Chinese companies and have made the decision to not invest in those companies, even though the superficial data would seem to indicate that they were doing good work. But with a little bit of extra digging, we said there's no way that this data can be accurate. So this is the work that we do as a part of our fiduciary responsibilities of being a research organization and asset manager, just to really understand the inner workings of these companies, whether they're US-based companies or Chinese-based companies.
So you raised my final question. You anticipated it, I believe, and that is, this does take a great deal of management and research, and a lot of investors are looking for solutions. Can you tell us about what Newday's team does to manage the portfolio? I think you've already described part of it, but what's involved and how does your fee structure work if somebody's interested in putting their money to work through Newday?
Sure. So, let's talk about process first, because I really do believe that it's one of a kind. So as addressed earlier, we are screening more than 8,000 global public companies for their environmental, social, and governance characteristics. And so what does that mean? There are literally hundreds of sub-factors in every one of these every one of these impact initiatives that we work on. So we also are gathering what is really important insights associated with our formal partnerships that we have with organizations like Earth Echo International, with the Jane Goodall Institute, with the Georgie Bedell Foundation, that have an ear to the ground around what's really going on in their space. I mean, this is the work that they do, the work that they and only they can do. And that insight ends up becoming particularly important for our work that we're doing on the research side. So after we screen these 8,000 organizations, we come up with a universe of publicly traded organizations, multi-cap, that broadly meet the test for ESG. And then our investment management and research team is then applying what is a bottoms-up, qualitatively driven fundamental process around specific security selection. And we've talked a bit about this before. So as an example, in the sustainable food space, Beyond Meat, we love as an organization, we love as a sustainable company, but would today be an appropriate time to invest in Beyond Meat? Probably not. There will be an opportunity, or there will be a time that we give consideration to that. But for valuation purposes today, it would be a company that we'd prefer not to have exposure to. And there are countless organizations, obviously, that are like that we have on our list, and it's just more a matter of timing. On the fee side, so we are typically, for consumer-related clients, charging 75 basis points. There are no transaction charges. That is an all-in fee for the investment management work that we do. And certainly for larger institutions, and we do a lot of business in this area with family offices, endowments, and foundations, those fees end up becoming considerably lower.
Well, and that's a reasonable starting point for almost any investment management firm. So it's really refreshing to see you also pricing this in a way that people can afford to participate. Now, how can people get started with Newday if they want to invest through you?
Yeah, the one other point that I should make, Mitch, as well, is that we, as a registered B corporation and as a responsible corporate community citizen, believe that it's important for us to be making our own contributions to all of these efforts. So minimally, what Newday does on each one of our impact initiatives is drive a portion of our revenues back to our impact partners. And that typically is about 5%. It's something that we identify as our 5% pledge, so that it allows our partners to continue to do the work that they and only they can do.
Well, so that's an interesting point, and I was thinking about this as you were talking about, Georgie Bedell and Jane Goodall Foundation. You're actually working with organizations that have their fingers on the pulse of the planet, and the fact that you're also supporting them is a critical investment on the part of Newday, but also your investors, in getting that information and extending the sensor network, for lack of a better way of describing it, that is telling us about how we're doing.
Yeah, I think that that's true. And it's, this is something that we're exceptionally proud of. There's not another organization, I think, in the world that has created and built relationships with some of the most distinguished impact organizations in the world today. And as an example, we're really proud that we had Philippe Cousteau on Saturday morning. We did what was an event for foundations and family offices, and had 40 families around the country participate in what was a learning exercise around how to begin this path to being impact first. And so these are not casual relationships for us. And we're really proud of the interaction that we have, the engagement that we have with some of these really, really important impact leaders that are tied to our work, and we're tied to theirs. So it feels really good.
Now, you recently sort of changed your interaction model. You used to be able to invest through your app. Now it's more of a call and engage. So just to follow up on my earlier question, so how would somebody get started investing with Newday Impact today?
Yeah, great question. So we are, we have a commitment to become a sustainable company as well, and we felt like a more sustainable business model was delivering our investment solutions directly to institutions, foundations, family offices, endowments, also consumers as well. So we are in the path of introducing what will be a series of products into the marketplace that can virtually be accessed anywhere in the world through the listing of exchange traded funds. So we'll talk more about that over the coming months as those markets or those products hit the market. They will largely be tied to our existing impact initiatives. If somebody is interested in learning more about how to work with Newday today, please send me an email directly at doug@newdayinvesting.com, or you can go to info@newdayinvesting.com, or just visit the Newday website at newdayimpact.com.
Well, Doug, the fact that you just shared your personal email on the air is a testament to your transparency. And I want to thank you, as always, for a fascinating conversation.
Mitch, thank you. It was a pleasure to be here.
We've been talking with Newday Impact CEO Doug Heske, and you can find out more about Newday Impact at newdayimpact.com. All one word, no dashes, newdayimpact.com. As I said during the conversation, folks, we have the opportunity to use our money not only to vote for the products that we like, if you think of it as a free market democracy, we can also start to invest to build a new future together. And it will be incredibly important for all of us to be aware of and start to look for these investments. And Newday is a great resource, and I hope you'll all take a look at it and begin to act. This is Earth911 Sustainability in Your Ear. I'm Mitch Ratcliffe, and we will, as always, be back with another innovator interview and a lot more. This 2022 is going to be a big year for Earth911. Stay with us. Share the information that you hear here with your friends, your family. This podcast, the more than 250 other episodes that we've done, are all available at earth911.com. You can find them on Spreaker, SoundCloud, iTunes, all of your favorite places to find and enjoy podcasts. Earth911 is there. We'll be back soon. In the meantime, folks, take care of yourself, take care of one another, and let's all take care of this beautiful planet of ours. Have a green day.